All right, let's check in on the world of banking and stable coins. Joining us now, Jeremy Allaire, Circle CEO. Like so many things, Jeremy, it's like 3 steps forward and 2 steps back. I think to some extent it's a nascent industry, burgeoning, but yet there's these little potholes along the way.
Well, it depends on the perspective that you take. I mean, last year we had the Genius Act passed. We saw USDC grow massively, transaction volumes growing massively. Sitting here at Davos, virtually every major bank in the world is sitting down to talk about how to implement and integrate this technology in capital markets, in payments, in tokenization. So things are accelerating. Regulatory relief at the federal level, every government here, all constructing policy. So we feel that continued momentum. Obviously, there's a market structure bill. I think that's maybe what you're referring to.
Referring to that,
some of these debates.
It was stable coins were the problem, wasn't it? Is that sort of the sticking point? And
well,
can you explain what we need? How many Democrats that can pass it?
So I mean, look, the issue is this: Genius Act prohibits stablecoin issuers like Circle from paying interest.
Okay.
And in fact, every regulatory regime in the world for stablecoins, and we're subject to a lot of those, prohibit stablecoin issuers from paying interest. These are cash payment instruments. That's what they're designed to be. But there are lots of companies that distribute stablecoins and provide services around them, and they want to be able to provide incentives and rewards and loyalty systems around those. And I think there's a debate about how to do that, and whether that's good or bad for the banking system. That's really the debate there. But I think the fundamentals, there's not really a debate. I think it's really around kind of this marketing activity.
Congress, things usually go so smoothly without any hiccups that I'm amazed that this is bogged down at this point. It's amazing anything ever gets done. Will it happen this year?
I mean, I think there's clearly bipartisan desire to do that. I mean, we hear that from leadership on both sides. And that bill itself is not about stablecoins. It's about a lot of other things. It's about opening up digital tokens for much broader use in capital markets, which I think is a very big deal. And so I think because of that, banks, capital markets, crypto companies, all the above want to see this.
So you wake up and you see Visa is starting to think about stablecoins and incorporating it into payment systems. What do you do? Do you go, yes, it's happening, or do you go, no?
It's fantastic. I mean,
it is?
Visa and MasterCard are both significant partners
of Circle's. They don't replace you.
And they're using USDC.
Okay.
And in fact, they've grown their USDC usage pretty significantly year over year.
So it's going to be additive to you, not.
There's short, medium, and long term on all this stuff.
Long term, it could be.
I think over time, the cost of storing and moving money around kind of goes to zero, just like the cost of moving data or publishing software goes to zero. And so, in that future world, and where AI agents are doing the money movement, it's going to be hard to know exactly what the payment business model is over that period of time. But everybody has to participate in the technology.
Not everyone agrees we're that close. That JP Morgan says it's years away, right? Analysts there where Visa thinks it's near term.
It's a question of how fast this scales, right? Is this, as Secretary Bessent says, is this going to be $3 or $4 trillion of stablecoins blanketing the world in the next 3 or 4 years, or is it going to be a trillion dollars of stablecoins? And how much is that like woven into the whole financial system? We take a somewhat conservative view on that when we talk about our own outlook. Sort of what a
so in the cone of variance for you, it's what? It's a trillion.
You'd
be happy with that. I would imagine.
Look, we've grown our circulation 80% year over year, 2 years straight. But we generally say, hey, look, a CAGR of like 40% in this is a pretty reasonable baseline, and that's just really built on the fact that there's more and more utility, and it's going to get deployed in more and more places. And so that's a pretty, I think, a pretty reasonable growth assumption on how this rolls out.
So some banks they're not using USDC. They're going to launch their own stablecoins. That would, I would imagine, not be positive, or the more the merrier.
Yeah, I mean, our view is that stablecoins are network effect businesses. So they're platforms people build on and integrate to, and they're utilities that people connect to. And the more people who connect to them, the more usage they get, the more network effects they have, the more circulation you get. And so we've achieved like very strong network effects, and we've got, I think, a very big global platform for that. And I think the important thing is we're a neutral company. We don't compete with banks. We don't compete with payment companies. We don't compete with exchanges. We're a market neutral player. And I think in this space, when you're building on stablecoins, you're going to want to build on a neutral infrastructure
You're
player.
perfect for Switzerland. It's beautiful. You love it.
Singapore's pretty good too.
Pretty neutral too. You just don't chew any gum, or at least don't spit it out on the sidewalk.
Exactly.
Anyway, I think you get canes still, don't you?
Yes, last I heard.
Not here. You're fine.
No.
All right. Thank you.